Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the $99 per year subscription service that I offer at the site. I like to do this. It gives, an opportunity for you to see behind the scenes. And if, this more knowledge, just more kind of information on how it works can help make your decision on whether or not you want to join the community easier, great. And it also just serves as a great educational example. Nothing worse than reading, a book and that author has selected the exact perfect example for everything they're talking about. Here we're looking at some nitty-gritty, real-life examples that literally have occurred that were sent out to members, and which brings into the first disclosure that I always make. Am I trying to portray that every single alert that I send out is a winner and it's always raining money and all of that? Absolutely not. Nothing is perfect. No one is perfect. No scan is perfect. So yes, losing trades happen, losing alerts happen. And if you followed my video series here, I've talked about, losing trades in the past. But what it does go to show is that, the importance of keeping losses controlled, focusing on risk management, risk control, because sure, losing trades do happen, but on the flip side of the coin, winning trades also happen. So when those winning trades, those winning alerts do occur, you want to make sure that from a risk management and an account perspective, you have your account positioned in a spot to best benefit from those winning trades when they do happen. Now, do they happen every single time? No, but sure, they absolutely do happen, as you're about to see. The second thing to note from just kind of explanation point is we are going to go back and look at the week of 11/19. Why are we going so far back in history? Two reasons. First is it's just simply giving plenty of time for the chart to play out. So now that we can see what actually has happened. And then second, a matter of being fair. I mean, if you paid the $99 for the yearly subscription and then all of a sudden you see this stuff out there for free on the internet, I'd assume you'd be kind of, you'd feel a little ripped off, and I would agree. So it's nothing, shady in terms of going far back. It's just a matter of letting the chart play out and a matter of being fair to paying members. So let's get to it. The first chart that we're going to talk about here was alerted ticker symbol GME, and the category I put it in was just, a history repeat. The last couple of times it was down around this area of the chart. You can see the price did indeed get some very nice bounces, and once again, the price was down right around this area of the chart. So as I noted here, the general area has produced some nice bounces in the past. So hey, is history going to repeat itself? Let's see how this one all played out. So here is again what the chart looked like. Before I go any further, before I forget, a couple quick little notes. As far as prices, keep an eye on the prices of stocks that we talk about. That's a common question I get. Hey, Clay, what type of stocks do you actually follow? And my standard reply is I will alert any chart, any stock that I think gives us a higher probability of winning than something else. I don't care about the price. I just care about the odds and the probabilities that the trade may work out in our favor. So here we're talking about a stock that's, up over $10, but just keep in mind, and if you've watched past videos, that I've talked about stocks over $100, stocks below a dollar. So the price range is all over the place. So just keep that in mind. I don't care about price. I care about odds of success and, the probabilities that, the trade will work out in our favor. And then also all of these, the newsletter is sent out on the weekend. So what you're seeing right here is what the chart looked like, after Friday and the close. And then the next, information you'll see, will be when the market opens back up on Monday. So with all of those things out of the way, let's see how this one played out. So again, that is Monday right there. And then the move down here happened. And this is where things get a little tricky though, because depending on how you played it, there's a lot of gray area. I can see how people might have gotten in, and then this move right here would have been like, okay, I better get out. I can see how maybe people wanted to see more confirmation and then perhaps got in down around here. And you can see that ultimately it turned out, and history did indeed actually repeat itself once again by bouncing all the way up there. However, like I said, going back to the opening, this was definitely not a smooth trade. It was not a smooth setup. Had it just, had this candle right here not existed, not come into play. Now, again, I could see how for some people that would have given them an awesome entry point. However, for other people, I can see how that would have definitely kind of thrown a monkey wrench into the plan and maybe even caused them to have to just hop out, which brings up the example where, have you ever been there, where you get in, something goes against you, whoops. There we go. I don't know what I clicked there, but we're back to normal. But have you been there where you get in and then something goes against you and you display discipline where you're like, you know what, I need to just get out, and then all of a sudden you get out and the thing goes totally in your favor? Well, here's a perfect example of that, and trust me, you're not alone. It does happen. So for me, I'm going to consider this ultimately a losing trade, maybe a break-even trade. But for some, yeah, it maybe was a big winner. Why am I being so sketchy in my explanation? Well, that just kind of really goes to illustrate the point of sometimes in the real world of trading, not looking at some sort of perfect example from a textbook, things can get sloppy, and you can have certain candles and certain days that either cause you to have to get out of the trade for a loss. It can cause you to maybe hesitate and then miss the trade. Or, you know, in some cases, maybe those days actually give you an opportunity at a good entry point. But there is no doubt about it, this one was not smooth due to that one candle. So it is what it is, but it does provide a good real-life example. But ultimately, yeah, the history did repeat itself. Things just got a little too sloppy beforehand. The next chart here is MDR, and category I kind of made up for it was just, you know, is strength building, and the strength building via, you know, the higher lows that were being formed. Obviously got beat up with the gap down here and started to slowly show some progress. So, you know, I made the comment about, you know, can it work its way back up to this red line here, which was represented of $10.70-ish cents. So let's see how this one all played out. Here, once again, is the chart as, you know, it was over the weekend. Another thing, a quick reminder, now we're talking about a sub $10 stock. So a good variety here in pricing. And just from a presentation standpoint, things are a little goofy because of this big gap down here. And, you know, not that long ago, the price was actually all the way up here above $20. So the point being, it throws off the proportions a little bit as far as the chart looks. So, yes, this trade works out, but it doesn't look like that much, but it actually is, but the formatting is just thrown off a little bit. So here we have, like I said, the trend line here that I talked about, and let's just see how this one plays out. So eventually nothing really occurs. However, what does occur is it pulls back to that trend line, and you can see it just hovers right here at the trend line. And I would say that there's no sloppiness at all. Of course, it drops a little bit below the trend line, but remember, trend lines, moving averages, supports, resistances are not exact specific levels. There is a range element associated with it. So I would definitely say that it stayed within the range. It's not like there was any sort of sloppy candle that, you know, had it all the way down here to $7 or anything. So it continues to just hover right around that trend line. And some patience required here. Some patience definitely required. And then there you go, starts to come to life. And then makes that move up there, which again doesn't look like that much, but, you know, given the price range, that was actually an 18.5% opportunity to pull profits from it before the price did roll back over. Now, am I saying that anybody played it perfectly? Now, no, I'm not saying anybody played it perfectly, but, you know, even if you made, let's just say 10% on it, 10% out of the 18, hey, for a matter of a couple weeks, that's not too bad. In the past videos, I've talked about, in fact, last week, how, you know, CD rates right now are 3.5% for 5 years. So literally 3.5% you can get for waiting 5 years, or if you played this one just for 10% in a matter of a couple of weeks. And I think I'd take the 10% 2 weeks over 3.5% over 5 years. So again, a nice little move there, and, you know, not dramatic movement, but yeah, good solid little move. The last chart we're going to look at is for ticker symbol ANY, and I totally just made up this category with the quote-unquote jumpy potential. I'm pretty sure Jumpy's not actually a trading lingo, but that's really all I could really describe it, because I talked about here how, you know, it has shown before that the price can actually make some pretty crazy moves. I mean, there is a wide range here. So it does show that it can get quote-unquote jumpy. The price can make pretty quick price movements. So that's why, you know, the best I could do is just throw it into a jumpy potential category. And then, you know, I give the bigger explanation right here. And at the end of the day, I said, hey, you know, it's worth watching, because these ones, if you like the quick moves, you know, keep an eye on it, because you never know what may be in store. So here's the chart on the weekend, and once more price range. Now we're talking about a stock that's down below $3 even. So we've covered quite the range of prices here, but let's see how this one played out. So this was on the weekend, and there was Friday, not much going, but plenty of opportunity if people wanted to get in. And then the next day, just an absolutely monster of a move. Pulls back a little bit. If you weather that storm, it came back to life and went all the way up as high as $8.70 for an overall profit window of 263%. Again, am I saying people played it perfectly and made 263%? I'm not saying that. Let's say you played it less than half right. Less than half right still gives you a 100% move in a time span of just a few days. So again, let's keep things in perspective. 3.5% in 5 years, or 100% in just a few days. like I said, no need to be greedy out there. And when you have a strategy and you know what you're doing, the stock market is truly a crazy place. But yeah, ANY definitely got jumpy for us and created a huge profit window where, like I said, even if you screwed up more than half of the trade, you could have still had an opportunity at 100% move, which is not too bad. So definitely a great winner for the membership community. In closing here, if you are interested in joining or learning more, then you can go to just claytrader.com/inner circle, or you can simply just go to claytrader.com and there's a section up at the top that'll direct you towards the Inner Circle subscription service. You get a lot of other things with it. Yes, you get the newsletters, which is what we talked about. But probably the more talked about thing, at least what I do on social media and such, involves the live trading chat room, and that's all live, real-time stuff. So it's literally a situation where you have kind of, I think, the best of both worlds. You have setups sitting in your email that are sent out, and then you also have the opportunity to interact with others, myself, live in real time via the chat room. As far as prices are concerned, I mentioned this already, but $99 per year, not per month, not per quarter, per year. If you do the math, that breaks down to $8.25 per month. Or if you break down the math even further and want to know how much it's actually costing per week, $1.90. So really, there's no excuses. If that's not fair pricing, I don't know what is. And as I always say, I'm very, very confident that over the time span of 12 months, you'll get at least $99 worth of value. Another thing, it does come with a mobile app, so it's not a situation where you have to be chained to your computer or chained to your desk or anything like that. You can stay in touch with everything, from wherever you are. So there is an app available too at no additional cost. So hopefully you decide to give it a try. If you do have any questions, leave it in the comment section below. Contact me through social media. Contact me through the site. Contact me in whatever means makes your life easiest. And I look forward to hopefully getting to know you better and networking with you within the community.